Do we have to do something, or it changes us automatically to? Okay.
Yep, so we are live. And we're just going to wait several minutes for people to join in. We have 4 startups today. It's going to be very exciting. 4 startups, each pitching for 5 minutes. Quite different industries this time. Very interesting, very intrigued to learn more about your work and ask you questions. Also, before I start, if you have any questions, you can send them in the Q&A chat, and essentially, I'll make sure to ask them so our audience can get their questions answered. So just gonna wait for several minutes to start, and we will begin the introductions. So, everyone, welcome to London New Tech 59. We've been there for 6 and a bit years already. Long time, lots of events, lots of startups, different countries. And now we doing virtual events. We used to do offline events in, remember those interesting times. And this time we're going to have 4 amazing startups presenting. The first is going to be TeknTrash. Second is going to be Caldera, Odin, and Peekabond. The format of the event is going to be 5 minutes live pitch by our amazing presenters, followed by 5 minutes live Q&A. So if either of you have any questions, make sure to send them into the Q&A panel on your right, and I'll make sure to ask them to get your interest fulfilled. I'd like to welcome Katharina, a new member of London New Tech, to the team. She is currently working as a health economist at Roche, and she's very passionate about startups. And she'll be working with events organization. I'm very happy to have her on board. She's a very enthusiastic person, and if you want to speak with her or anyone else on our team, you can speak with us after the event in the networking part of the London New Tech. Also, want to give a shout out to our partners. We have Sterling Law, which provides legal services to the team. We have Tide, which handles all of your finances for your startup. We have Nurture by GCT Core, which provide an accelerated program for startups to gain more exposure via outdoor advertising. And finally, we have Tech3, which connect tech talent to the most exciting tech companies of London. So now it's time for our presentations. And first, we're going to have Al from TeknTrash.
Hello, and thank you for listening to our presentation. Let me load it up. here. Hold on. Mhm.
So Al has been to London New Tech at least once, maybe a couple of times. Last time was a year ago, and it's amazing to see how his startup has progressed since then. And I'm very curious to learn more about that. Go for it,
Yes.
Al.
Thank you again. TeknTrash, it's a AI company. That's very important to understand. We get all kind of people get thinking that we are in the business of recycling or environment. I mean, we do help in the business of recycling and environment, but we are a data and AI company. So that's very important to understand. The very first thing that we need to understand also is that we ESG is no longer something that companies can afford just to have on the back. You see what happened with the Deliveroo IPO when it lost one third of its value because of ESG concerns on the way that it treated its riders. You see that in the United States, companies, Coke and Pepsi, are already being sued because their products end up in the ocean. And then, and in this article, it says one answer to America's recycling problem: make big brands pay. This is the most important part. This is exactly what we are bringing to the table: a way for companies to pay for recycling, but in exchange get valuable data so they can improve their sales offering, and of course, with that extra money, they can pay for the service. Having said that, 8 million tons of plastic end up in the ocean annually. Methane is 88 times stronger than CO2 for global warming. And I open parenthesis here. I am a biologist. We are three biologists in this company, so we are very well focused on ESG and everything that has to do with environment, and we don't accept greenwashing of any kind. So we are very focused on that. So the thing is, 11% of all methane in the atmosphere comes from trash. A lot of the plastic that you think is being recycled, it is not. And then the model that is being used is a stick instead of a carrot model. If you recycle, nothing happens. If you don't, you get punished. The end result is people don't recycle properly, bottles end up in the ocean, they end up being eaten by some dolphin or something, and it doesn't say in the bottle Mr. Whoever who dumped this bottle improperly. It says Coca-Cola. So we have a big problem here in terms of brand equity, brand image, and most importantly, the lack of data of post sales. So basically, we this is the problem. We have sales, we have after that no visibility. Companies, they don't know if their products were well disposed. They don't know exactly who the customer is. These things end up inside some whale, and we have a negative brand equity. The solution is recycling data. We recycle everything today, but we don't recycle data. That means that we don't know what happens with a product after it has been sold. Now, I want to show three things from The Economist, from Forbes, and from Wired that says that data is the new oil. And this is vital because this is what we are offering: post-sales data that companies can use and can compare to their regular sales data in order to understand better their customers. To that, we have developed a solution called Stipra that has two parts: a B2C, which is basically an app, and most importantly, a B2B, which shows in a map just like this one each time a product is disposed. So, hello? Can you guys hear me? Hello? Okay, wonderful. So Stipra has two parts: www.stipra.com, which is basically where people register, where they can see their points, and they get points whenever they make a video of their products being disposed, and this video has a product that is being actively tracked by corp.stipra.com. So, for example, it could be a video of Nivea. Over here, you see a bunch of Nivea products. And companies go to corp.stipra.com and they can see this map on a, and they can see also the age and the gender and the geolocation of each one of these products. So there are three main models here according to the amount of data that we can provide per month. Of course, this model is supposed to engage the company, and the team is led by Dr. Kaveh Madani, which is you can see here in COP25 as a world leader in ESG and environmental issues. We're looking for 150K to jumpstart a 2 million crowdfunding campaign, and we are SCS approved by the HMRC. So thank you so much. Mm-hmm.
Thank you very much, Al, for your presentation. Now it's time to ask you some questions, and it would be very interesting to know about the origin of TeknTrash, how you started, and why did you decide to solve this huge problem?
Well, like I said, I am a biologist, and I myself, I don't like recycling. I think that it makes your hands dirty. You have to go outside. I used to live in Spain, and over there, they take that thing very seriously. And then my idea was just a service in which people could just pay for someone to take up their garbage. But then I realized that garbage carries important data. If I find as a company that half of my products are halfway empty when they're being disposed, that could mean that these products are not being enjoyed by the customer because they are only using half of the product. If I find 1 million bottles of shampoo in a town which the manufacturer does not sell that shampoo, that could indicate an undersold position. If I find 1 million bottles of cough medicine, which, as you know, is COVID coffee, it's a COVID symptom, that could be a COVID outbreak, and that's important information for the NHS. So this started to grow, and then we have today a great team I'm very proud of, and then so it's been a long ride, and like George said, this is the second time that we're here. The first time it was actually in London in person, and there has been a lot of good developments ever since. Mm-hmm.
Sounds good. Great progress. We have a question from Florian. Can you walk us through incentives for the consumer to use the system?
Yes, I had no time to say that. The system allows for a number of perks and even money to be paid for whenever people make these videos. If I'm not mistaken, the minimum was $5 and the maximum per video was $20, which is pretty much what you would be paid if you disposed of products using these reverse vending machines that are common in the Nordic countries, in which you dispose of your bottles and you get a ticket which equals money. However, our model is more advanced because that's actually a tax that has already been paid. So it's your own money coming back. And also the company is not getting any data. We're providing useful data to the company, and we're providing new money for you. We have today 3 campaigns running. You can get money, you can get Roblox points, which is, kids love it because it's a video game, and also you can get Nectar points. In the future, the idea is to have as many rewards as possible in our offering, so people at the end will choose maybe to participate in a sweepstakes to go to the Bahamas or something.
Very interesting. Another question from Mizari. How will you be able to moderate the user's photos, proof of their disposal at scale?
Yeah, well, this is the second version of the app. That's a very good question. The first one, you were required to make pictures of each product, and the problem was that people complained that it was very cumbersome. And on top of that, we found out that they would take several pictures of the same product in order to get points. So now you have to do videos, and AI system gets the video, chops the video in frames, looks for barcodes in each frame, and then it grants the points accordingly. So if we think that all of the sudden you're getting far too many points, we can just go to the video, and it's really easy to see that you're just doing this with your product or something like that. So the amount of fake data that we got went from, I don't know, something from basically zero.
Okay. And so it would essentially require some sort of human intervention, but later you're
No, no,
going
no.
to.
Only just like a bank. I mean, banks they have some kind of analysis about on AI, but if it gets more complicated, it goes to a human. The same thing. Our system is able to identify if, for example, something is strange, because if the system will only grant you points for if you show the same product several times, doesn't matter. It will identify that it already saw this product, and it will just ignore the. So you can get the product and you can show it several times, but it will realize, hey, I've seen already this product. It will just ignore it. But if still you are smarter than that, then it goes to a human, and we just see you doing this or something, and we just knock you out of the system.
Perfect. Thank you very much for your pitch, Al. If any other members of the audience have further questions, they can ask Al at the networking stage after the event. Thank you, Al.
Thank you for having me here.
Now it's time for the second pitch from James Caldera.
Thank you, Arkady. Let me just share my screen. Hopefully, I think, is that clear?
Yes.
Okay, so thank you very much. So my name is James McNaughton. I'm the CEO of Caldera. I'm here to talk about our Warmstone heat battery. So over the next 30 years, the UK government needs to convert around 1 million homes a year to low carbon heating. And at Caldera, we tackle the hardest to heat homes. We use our patented Warmstone heat battery, and it's a direct replacement for an oil or gas boiler. We're currently in the middle of a Crowdcube raise, been really brilliant. We've raised 1.1 million so far. We've got 2 days left, so it is still open if anybody's interested. And one of the things that's come out of it is, on the back of that publicity and an article, we've had around 170 pre-orders in this month, in the last month alone, for next year. And as our target was originally selling 100 units next year, we're pretty blown away by that. So the driver for this, we need to get to net zero by 2050. Currently, for homes that are not on the gas grid, the only solution is heat pumps. And in terms of the number of homes, there's about 1.2 million in the UK that are not on the gas grid using oil or LPG. In Europe, there's around 14 million in total. And these are all older and larger properties. On average, an off-gas grid home uses 70% more energy than an on-gas grid home, and around 60% of them have solid walls. And this is the problem. New heat pumps work well in new properties, but to make an old property suitable for a heat pump can cost in the region of £20,000 to £40,000. And these retrofits are deeply disruptive to the homeowner. They can involve moving out. And when you look at the other alternatives, they're all more expensive. We've got a board of 4. We've got myself. I trained as an engineer, spent most of my life as an entrepreneur. My co-founder, Guy, has spent a large proportion of his life in manufacturing. Mark Lee is an experienced merchant banker, and Andrew Brown is an experienced corporate communications executive. And we've had support from a number of organizations that you can see at the bottom of this slide. Our solution, this is a Warmstone heat battery, and you can see me standing next to the unit that's been heating my home this winter. stores 100 kilowatt hours of heat, which is enough for a sort of normal sized 4-bedroom house, reasonable insulation for 24 hours in the winter. It's got the same power output as a boiler, and we're targeting a £10,000 installed cost. At the moment, we're selling them at £12,000 installed, including VAT. And to compare it, if I put the same quantity of batteries in my home, it would cost me £70,000. And the aim is minimal disruption. We use all the same plumbing as your existing boiler. And you can also store any excess. If you've got solar PV, we can also store any excess in the summer to give you some free hot water. Now, it's really simple. We need to put, the unit is heavy, so it goes outside your home or in a garage. It's 1 meter in diameter. It's about 1.75 meters high. We connect it up to your electrical supply, and then we plumb it into where your existing boiler is, and we can remove the boiler. It uses exactly the same plumbing from the boiler to the rest of your house. And this is what makes it so easy to fit. Our target market, they're homes that use heating oil or LPG. Within Europe, with a total addressable market of around 2.5 billion, and we're targeting 25% of this within 10 years. Our initial route to market is early adopters, either via direct sales or referrals from people that put solar PV and battery installers. And I think we've had a fabulous response already. So in terms of getting our early sales targets, we're very, very confident we'll now achieve that. But our longer term goal is not to do a B2C channel, but to actually be B2B2C and sell via much larger utilities who sell to their customers while offering them special low-cost electric tariffs. In terms of competition, we're by far and away, as far as we see per kilowatt hour, we're the sort of cheapest and the largest heat battery that you can find on the market. Smart water cylinders don't do central heating. Lithium-ion batteries I've already mentioned, extremely expensive, as are the heat pump retrofit. And in terms of being able to carry on using your oil boiler, they're banned in France. Replacement boilers are banned in France from 2022, Germany from 2025, and the UK we're expecting to follow sometime around the time Germany is doing it, or maybe slightly afterwards. Here's a picture of our factory. You can see it when we do manufacturing. We have a patent granted for the material in the UK already. We've had £1.5 million invested in the business to date. And we've got 2 units working well. And as I mentioned earlier, we've had 170 pre-orders for next year. Next steps, and this is what the funding's to cover, to complete certification, we want to run 10 units in trial homes this winter, and we want to convert these pre-orders into full sales for next year. So as I said, we've had 1.1 million raised. We still would like to raise more money, so there are 2 days left. So if you like what you've heard, please come to us on Crowdcube. It is an EIS equity investment, and the pre-money valuation is 4.56 million. Thank you very much for your time. And I get back and stop sharing. I think you should all be able to hear me.
Thank you very much for this amazing presentation, James. If anyone has any questions, make sure to send them in the Q&A panel. And can you tell us a little bit more about the origin story of Caldera, how you started, how your professional background led to this?
Okay, so I spent around 10 years running a company called Isentropic, where we looked at doing large-scale electricity storage, where we converted electricity to heat and back to electricity. And that gave us a huge amount of experience around thermal storage, particularly at high temperatures. And I spent years, in fact, looking for ways to store heat cheaply. And when we finally came up with how the WarmstoneTM material, it solves all the problems we wanted to solve at the time. It's solid, it's made from either recycled materials or natural materials, it's non-flammable, non-toxic. And at the end of the life, we take the WarmstoneTM block and we make a new block from it. So it's literally, it's perfect for the circular economy. And because it's not made of expensive components, it's also affordable.
Great, thanks for this. And can you tell us a little bit more about the timing for entering the market at the moment? So you mentioned that the UK has a particular goal to reach. Can you walk us through that a little bit further?
When you say, so for us, I think we need to run that. So we run a unit through my home through the winter. It's gone really well. Been days when I've completely forgotten it's even there. So it's done everything we wanted it to do. We're now looking to do it in 10 to 12 homes to find out if there's anything we haven't, expected. That's the whole point. You do it, and then from next, probably March, April, we start installing and selling what I would say is, effectively first of a kind commercial units. Our plan was to sell around 100 next year. I think we will try and make more and sell more than that. But in terms of the journey, if people are asking to buy a unit, they fill in the pre-order form on the website. We get in touch with them. I have a conversation with them, but it'll shortly not be me. We get a small deposit off them. We do a site visit, and then if they want to go for a unit, they put a deposit down. It's all refundable, about 20%, and they can then put their name down, and we give them a manufacturing slot for next year and an installation time.
Sounds great. Very neat organization. And we have a question from Miles. Why do you think no one has done this before?
So the answer is they've done things like it before. So in the 80s, they developed something called a dry core boiler, which is a big pile of night storage heater bricks in insulation. The two problems are the power output needs to be really good and the insulation. So we use sort of ultra efficient vacuum insulation, and it takes, even though we are storing at 500 degrees Celsius, it takes 19 days to cool down from 500 to 200. So we've done two things. We've developed the material, but we've also developed the whole package, including the insulation. And then the second thing that is absolutely key is that we're moving to smart meters. Without smart meter, our whole sales pitch is around smart meters. You need time of use tariffs. So Octopus suddenly opened up the market 2-3 years ago with their Octopus Agile tariff, where the price of electricity that you pay varies throughout the day, and it reflects the wholesale price. At the same time, we now see this huge sort of tidal wave of offshore wind that we're installing in the UK, where we can just see the amount of volatility. So while you might get a few, 40 or 50 hours a year where there's negative pricing at the moment or zero pricing, it's going to be hundreds and then probably well over 1,000 hours a year when the wholesale market is zero. So I would say if I tried to do this 5 years ago, we wouldn't have had smart meters, we wouldn't have time of use tariffs, and it wouldn't have been so there's a bit around the timing. And in terms of the rest of Europe, we are ahead of Europe. We have more renewables and we have less interconnection than every other major economy. So we think this gives us a huge first mover advantage.
Amazing. And another question from Chad, who also says, congrats on the great pitch. Can you tell us a little bit more about your intellectual property?
So we've patented the material, and it's just been a very busy year. There are about I have a lot of experience. We're at 5 or 6 patents that we are going to file, because it's not just the material, it's how you integrate it, how you make it work. There have been lots of things that we've had to do that weren't obvious when we started our journey that are really important. So to me, I call it sort of layers of, you want to have multiple interlocking patents that just make it really difficult for anybody to come into this space.
Absolutely. Very defensible. Great. And just the final question. So you're almost done with your fundraising. Congratulations on that. Can you tell us what are your plans for the next half a year?
So next half a year, we've got the units already in sort of manufacture, but we basically 10 to 12 units into homes. We run them through the winter, and then we want to start actually turning these pre-orders, as I said, into sales. We will probably like to go out fundraising in the sort of similar time in 12 months' time, but on the back of actually having hopefully a full 12 months of order book. And we'll be able to then, and there's a couple of things that might mean we go faster, but that's our 12-month plan, and then there will be a fundraise in about 12 months' time.
Absolutely, sounds great. Well, thank you very much for your time and amazing pitch, James. If anyone has any further questions, make sure to catch James at the networking after the event, and I'll speak to you soon.
Okay, thank you.
Now, to our third presenter, we have Patrick from Odin.
Thank you. Cool, so I can just present. All working? Yep.
Yes.
So hi, I'm Patrick, or Paddy to friends. I'm the co-founder of Odin, and we're on a mission to democratize access to early stage investing, starting with venture capital. So obviously very relevant to the audience here. So a lot of people want to invest in private companies, and we can all sort of recognize that society's experiencing, I guess, a radical shift, and that as a result, smaller businesses have big opportunities. And this is reflected in private equity. So global assets under management in venture capital have increased 700% in the last 10 years alone. And really, we think that's just the start. So if you look at alternative assets like Bitcoin, Ethereum, and NFTs, they show what's possible once friction is removed from alternative investing and liquidity is improved. So, the assets are tradable. In spite of this, in Europe, it's still really difficult for most investors to source, assess, and access top quartile early stage deals and funds. The reason top quartile, or at least the top 50% of the market, is important in venture is it's a game of power laws. So the top performing deals return thousands of times your investment, and then the less performing deals have a very high failure tendency. There's really two reasons this is the case. So firstly, fund administration is really stuck in the 20th century. So it's very analog, it's messy, it's expensive, you need lawyers, you need accountants, and there are specific fund administration providers who have an old-fashioned way of doing things. And that means it's not digital and it's costly. And that reduces investor access. So, fund managers are happy for you to write a £200,000 check into their fund, but not so much a £2,000 check. And the second reason is that the existing platforms, for example, Crowdcube and Seedrs, and I worked at Crowdcube for 2 years, and I think they're awesome, but they're not really designed with the business of venture capital in mind. They're quite transactional and more seeking to completely disintermediate investment managers and go direct to the consumer. And that's fine for some businesses, but in the world of early stage investing, good investment decision-making is really all about specific knowledge, structured thinking, and long-term relationships. And that's what gains you access. And access is crucial in venture because a lot of the best rounds are hard to get into. So at Odin, we believe there's $1 billion opportunity to create a social platform for private markets investing, which will unlock this asset class for individuals and then also for institutions in a way that's not really been seen before. Unlike other platforms, we're very focused on allowing people to connect with each other on an individual level, a bit like Twitter. So you can follow investors and founders, consume their content to learn how they think, view their portfolio, and co-invest in their deals, essentially, or will be able to. Investors will be able to discover quality managers and much more easily piggyback their access to invest in their SPVs, so their single deal syndicates, essentially, or in their funds. And smaller investors will be able to learn, connect, and invest passively from as little as £1,000 a year. So we'll roll them up into fund of fund structures and give them access to a quality, diversified portfolio based on themes they're interested in, a little bit like how Nutmeg works. So it's sort of like ETFs or index funds for the private markets. Our community, currently we're doing this all on Slack, really loves what we're building. We've already facilitated several million investment into people in our network, and we've had inbound from companies now backed by Y Combinator, Peter Thiel's Founders Fund, 7% Ventures, and a host of other UK VCs. We're bootstrapped, and we've generated £16,000 in revenue since January, so early days, with a forecast for 12,000 in June. And we've had expressions of interest from a large number of angel syndicates and venture firms like Entrepreneur First, Ada Ventures, and a bunch of others. In terms of go-to-market and what we're doing right now, we're starting by building the technology for deal makers and funds to flexibly structure individual syndicates and manage their investors in private deal rooms. They can offer portfolio tracking, shareholder updates, etc., all at radically low cost. So by digitizing these sort of painful administrative processes and making them incredibly cheap and low friction, we drive a supply of quality investors and deals onto our platform profitably and create sticky relationships with gatekeepers to quality deals. And meanwhile, we're running our community in Slack for the time being, with plans to launch the public social platform early next year. And in terms of business model, currently we charge a deal structuring fee to investors. So that's good for the time being, but longer term, we're really aiming to monetize through a combination of carried interest and commission on assets under management, a bit like a fund of funds, and then also on data, advertising, and other services. If you imagine this really becoming sort of an aggregator for the ecosystem. Right now, we're a team of 2. I handle operations, sales, and marketing. And my co-founder, Mary, handles software engineering and product development. We've both had previous experience limited as founders, and then we've both worked in venture-backed startups, and we've both worked in the fintech space. We've recently brought in a couple of experienced advisors who have, decades of experience in venture capital, as GPs and as LPs, as investors in funds, who are supporting on strategy and network. We're raising 450,000 in pre-seed funding. We have SEIS and EIS advanced assurance. We have 300,000 in commitments so far, so the SEIS is really taken. And we're aiming to begin closing the round from next week, and then we'll leave it open for a period of time. People can invest directly from a relatively small sum via a nominee, an SPV that we're setting up, or larger tickets can go direct. Sorry, they can invest via a vehicle. And yeah, that's it. Thank you for listening, and thank you for all coming along. I'd love to hear any questions.
Thank you very much, Patrick. So as always, any questions, shoot them to Q&A. We'll make sure to ask Patrick them. And as a traditional question, can you tell us a little bit more about the background story of Odin? How did you start it?
Sure. So I left Crowdcube in 2019. As I said, I think it's a great business, and it's really solved a lot of problems for a lot of founders. I think there's more opportunity to scale something that focuses more on relationships, and that's what I always felt. I guess the closest thing to what we're building is AngelList in the US, but even that is not very social and not very community driven, which is, we think, part of the secret of getting this right. So I sort of started bouncing ideas around with Mary in late 2019, and then I was doing some consulting work for Coca-Cola at the time on their corporate venture, and then we started out just sort of collecting up some people and sharing deals via a Slack community, not charging any fees to founders or anything like that. Very much like, how do we get some good people in the same place and build a community, and then see what products they want. Initially, we were looking at running it more like a crowd-funded fund, but a lot of the higher value, angels and VCs in the network, they see very high quality deal flow, and what they want to do is monetize that access themselves, right? So what they wanted was a deal structuring product to allow them to put together a special purpose vehicle. So a special purpose vehicle is a fund created for a single investment, then collect the money from people, and then charge a bit of carried interest, right? So a bit of profit on the upside if and when the business sells. So we sort of started working on that product in late April, and then we've built like an MVP. We've done a couple of syndicate deals ourselves, and then we're just launching our first SPV for a customer this week.
Sounds exciting. And question is, would you consider using your own platform to raise money for your own business?
We will. Yes, we are. So you can invest via our SPV. Obviously, we're not charging any carry or anything like that. We've got a couple of syndicates and stuff who have their networks, so they're coming in through their channels. But yeah.
Okay, absolutely. And can you tell us, because you mentioned AngelList, which is really a very popular
Yes.
platform to source deals, particularly in the US.
Yes.
How would it be different in sort of UK/Europe from the legal point of view, as well as Yeah,
good question. So I mean, AngelList, great platform. They actually sort of launched in Europe in 2015, and there was quite a lot of fanfare around that. They worked with an existing fund administration provider, which I think can be a bit problematic because you're tied to like their costs, which are quite high, and they're fine if you're managing like a £50 million plus fund. But if you're talking about structuring, 50K or 100K syndicates deal by deal, it doesn't really work. I think the other thing in Europe, and the thing we're focusing on offering, at least initially in the UK, is EIS and SEIS on the deals through nominee structures, which you can't do via AngelList. The UK is about a third of the European venture market, so we think it's a good place to start. There's also been a lot of unicorns in the UK and liquidity events, which means more operators with money who are interested in investing in early stage. Because if you look at Europe, I think timing-wise, we're only really ready for a product like this now because 75% of all the unicorns in Europe have been created in the last 5 years. So that creates the money to feed back round into the bottom of the ecosystem, being invested by operators. Strategically, AngelList have sort of decided not to focus on Europe. So they've actually pulled out of Europe this year. Their rolling fund structure, which they're focusing on going forwards, doesn't really copy and paste very well. Our plan is to start in the UK. European investors, if they are sophisticated or professional or high net worth, can invest via the UK vehicles. And then we will establish a second office in Europe. We'll use one area of Europe to domicile our SPVs, and then we'll collect via EU passporting rights. We can collect investments from anywhere else in Europe. So yeah, I think other than that, for us, it's really about getting the social stuff right. So I think the deal structuring is like, what we're trying to build here is lots of people have tried to build sort of social platforms specific to tech. I think that the challenge is you have to get the most powerful nodes in the network on board, and then they pull in the other users, basically. So to do that, you need to provide a service that's valuable to them. So that's why we're starting with deal structuring. But really long term, it's about how do you make this as social as possible. I think AngelList sort of social never really happened with AngelList. And, I also think from a user experience, it can be a little bit confusing. Like it's sort of a jobs platform. It's also like you can discover syndicates, but they're a bit hidden away. And then, finally, the US regs on investing via angel deals are a bit tighter than the UK. So we're looking to take advantage of that.
Great answer, and also covered my other question. So
cool.
Thank you very much for this. Cool. Thank you very much for this great presentation, Patrick.
Thank you. Thanks for having me.
If anyone has any further questions, shoot them to Patrick after the event at the networking stage, and I'll speak to you soon. All right, perfect. So now to our final presenter, Annika with Peekabond.
So I believe I'm next, but I unfortunately cannot hear you guys. So if there's any questions, please ask them in the chat. And I hope this will work. So we'll see. So can anybody see my screen? I hope so. Yeah, I see a thumbs up. Thank you for that. And I'm going to start presenting now. So thank you all for letting me speak here. And to start off, I would like you to think about someone in your childhood with whom you had a special bond. Scientists actually say that those bonds are a really great indicator of success later in life, yet 40% of people lack those secure attachments. And I would like to share a story about my personal special bond that I recently created with a child at a distance. This is my little niece in Australia. She's 2 years old. I'm completely in love with her, but unfortunately we are separated by distance. And this makes it very hard to build a bond with young kids. I started looking for solutions out there in the world, but there's not a lot out there that really pertains to my needs. So I decided I will just create it myself. And I did some research, and I found out that actually millions of families are struggling to keep in touch remotely with young children. And the things that they run into is that kids don't really have an attention span when you're live video calling like we are now. People also don't know how to engage with kids because they don't really interact with those kids on a daily basis. And that makes it very difficult to build a meaningful connection. So it really ends up just talking about, hey, how was your day? And yeah, the creativity is just lost. So that's why we built Peekabond. And we are going to help global families to build better bonds remotely through applying child development science and giving content suggestions. People can be helped in sparking their creativity. We also help them to build rituals, and we focus fully on kids, so it's safe and secure. I'm just going to show you what the app currently looks like. So I'm just going to slide this over here. So once you enter our app, you immediately see that you've added your child Noah on the top, who's 3 years old, and you get content suggestions that are smart, that are actually based on his age and his interest. And ultimately, we will, of course, make them smarter by building an algorithm. And you can see that for this content suggestion, you have about 5 minutes to do it. It's suitable for kids 3 to 4 years. And you can even see some inspiration videos, as you can see here. But most importantly, we give a science nudge. So we actually link this to the child development milestones. And once you create it in the app, you can even get like a narrative, if that's what you like, to make it super low barrier and simple for you to start creating content. And we store it in the app safely and secure, like I said. And you can even watch the reactions of your grandchildren or children at a distance. We ultimately want to record their response while they receive the video, so that can even capture the moment better. So there are several trends that are helping us to gain momentum. I'm going to pick the one right at the top because that's the most important one. Tech-savvy grandparents are a huge trend, and it's a very underserved market. On average, did you know that the average age of becoming a grandparent in the UK is now 50 years? So these people are really tech savvy and they spend huge amounts on their grandchildren. So last Christmas alone, over £2 billion got spent on grandkids. And these 40% of grandparents regularly feel lonely. And if they are more in touch with their grandkids, they actually feel less lonely and are more healthy and happier. So the market potential is huge. It's a 7 billion market, and it's expected to grow by 8x in 2024. We are intending to charge a subscription business model, which we validated with our potential users and with 100 people that we interviewed, actually over 100 people we interviewed, and we benchmarked it with competitors as well. We are a tech for impact company, and we intend to measure that impact as well. So our beneficiaries are these 3 groups, and ultimately we want to prove that loved ones feel empowered, parents feel socially supported, and kids feel securely attached. So where are we right now? We've designed a solution. We're actually in the 5th version of our prototype. We've built a content library with over 100 content prompts and a waiting list with over 200 families ready to test our app. We're building the MVP as we speak and running experiments on a daily basis because we're a learning organization. And we're currently fundraising a convertible loan for angels. We have a signed term sheet, and we would love for you to join. It's actually a relatively small round compared to the previous people pitching. It's a 150K round, so we mainly need this for tech development, and we're intending to close in July. So if you're interested, please reach out. This is my team. Vincent is also joining today. He's my co-founder with a UX background, and we also have Martijn recently joining the team as an engineer. So I believe that we are, with the 3 of us, we are the hacker, the hipster, and the hustler that this company needs to be a success. And I just want to let you think back to the special bond in the beginning that I asked you to think about. And ultimately, we believe that these bonds don't have to be physically close, and we think that people can actually build those bonds at a distance as well, and we want to enable that for families worldwide. To be specific, for 4 million families in 2026, so we want to help them to bond remotely without space, time, and age limitations. So please join our remote family bonding movement and help us to bring families closer. Thank you. So unfortunately, I cannot hear your questions, but I'm gonna check the Q&A. So the first question is, how is this different to Marco Polo? So Marco Polo is actually an asynchronous video app where there are no content suggestions, and it's also not integrated with child development science. So thank you for that question, Daniel. Sorry, George, I missed your question above. So how do you differentiate yourself from other similar communication social apps out there? It's a bit linked to the question of Daniel, I think, but the content suggestions that we give are definitely different. Also, the fact that we firstly focus on asynchronous content, that we fully focus on kids, we're an ethical player, and yeah, I think those are the key things to focus on. Katharina is asking, how are you planning on monetizing your platform? Well, I think there's several ways we can monetize. Like I said, we are intending to do a subscription model, like I said in the presentation as well. We also think there are opportunities because grandparents also like to give their grandchildren gifts. So maybe that could be an additional add-on model. We could sell more interesting content via the platform, or we could do a referral business model. So there are so many options, but firstly, we will focus on subscription. And let me see if there's more questions. Would you consider using your own platform to raise money for your business? No, I think that's not a question for me. How do you plan to keep people engaged? Yeah, that's going to be a really great challenge because engagement is our key metric that we want to show in our app. I think there's several ways. So we want to really take families by the hand from scratch and really build their bonds through a program that we will give to them. So it's actually most comparable to how Headspace is doing that. So they start very simply by giving you simple things to start with if you're intending to do meditation. And over time, the meditations become a bit more advanced. So that's also how we want to do it. So we start mostly by fun content prompts, but I personally believe that the way through to the heart of a child is through their laughter. So if we can make them laugh, we can actually get them engaged. But I think what would really make a difference is if we can also get that deeper level of connection. So the next question is from Zari. What platform will you be on, Android and iOS? Yeah, that's of course a great question as well. We want to be an inclusive company, so we decided to develop on React Native, enabling us to be as inclusive as possible at this point. So it will be launched in the Android and iOS App Store. And web is going to be a little bit later in the roadmap, but ultimately all platforms, right? Thanks, Sari, for the compliment. All right, it's really strange because I cannot hear you guys, but okay, there's one more question popping up from George. What key milestones are you looking to hit in the next year or two? So I think for the next half year, the key milestone that we're targeting to hit is engagement, so number of users and the number of content videos that they are creating in our app, which actually shows that they are engaged, that they like what we're doing, and that they are building those bonds. In the next 2 years, obviously, we would like to hit some monetization as well. So having paid subscribers on our platform. And I think my ultimate dream is if we can actually show that Peekabond helps people to build better bonds. So if we can even measure somehow how the bonds are prior to using Peekabond, and then also measure it after using Peekabond, and that we can actually help families to become closer, that would be awesome. So thanks, Ari, for that. Thanks, everyone. If there's any other questions or thoughts, please feel free to reach out to me.
Thank you very much, Annika. Thank you. All right, so this brings us to the end of the presentations. I'd like to everyone to turn on their cameras and just give each other like a rave of applause. It's been great pitches, great work, everyone. Thank you very much for joining. All right, cool. So if anyone has any further questions, please feel free to jump into the networking part of the event, where our presenters will be there. You can also ask us, the organizers, any questions. And it would be great to chat, get your feedback, and prepare for the next event. Thank you very much, everyone.